Good morning. This is the video newsletter for buysellshort.com for Sunday, November 29th. Market got slapped around pretty hard there on Friday, even though it was a holiday shortened session. We saw a big gap down on the open. You can see it here on the 15-minute chart, and the reason was Dubai essentially defaulting on their debt. They owe $60 billion. They asked to defer payment until May on $5 billion of that debt, and the markets just got hammered overseas. They were open on Thursday when we were closed for Thanksgiving, and we saw European and Asian markets down 3 to 5%. So really, the 1.5% drop we saw on the Dow wasn't that much given the smacking we saw in the overseas market. News is actually just out right now as well that the United Arab Emirates Bank is saying they're going to provide liquidity. So it's going to be interesting to see what happens Monday morning. If we look at the 15-minute chart here, you can see we're about to get a positive MACD cross on the 15-minute chart on the Dow. We've seen this happen, I believe, 6 of the last 7 Mondays, and we've seen an average pop of about 50 to 70 points on the session. So, given the UEA announcement today and the big sell off we had on Friday, we're probably looking at some sort of gap up tomorrow morning. Granted, we would have much preferred to see the market gap down big tomorrow and then see buying come in. Market, as I've said many times, is extremely overbought here, and we really need a decent sized sell off to, you know, get rid of this malaise that we're seeing in much of the market right now. As such, as you note on the alert we sent out on Friday, it was just time to flush the account, start fresh, get rid of those plays, those quarter, half position stocks that we've been holding on to, and just start fresh. Perfect timing to do it. Tomorrow is the 30th. If you're looking to book tax losses and want to rebuy for the January pop, now is probably, or tomorrow, a good time to do it, especially on what could be a pop on the open. If we look at the daily chart, here on the daily chart, you can see we touched the 20-day exponential on Friday, and we could see a bounce back from that area. We would really love to see the uptrend line tested down here at the 50-day moving average 9900s area. But as you note, and we've noted, the momentum has been continually slowly lose steam here since the July lows. RSI, as you can see, continues to put in lower and lower highs, and volume, especially over the last month, has just fallen off a cliff. So if the sell off is real and if we're going to see a down move, we will see it Monday or Tuesday. That is when, like I said in the chat room, we'll learn how much the market really fears what has happened in Dubai, or whether it's just another blip in the slow thread or tromp higher in the market. One thing, of course, to keep an eye on: US dollar, of course, had a nice bounce back on Friday as they sought safety. Although the currency that they're talking about fleeing for safety right now is the Japanese yen, and that hit almost all-time lows there on Friday. And there is a lot of intervention talk coming out of Japan right now. They've got deflation again in their economy, and the last thing they need is a strong yen, which is going to cripple their economy even worse. So they're seriously talking about intervening in the currency markets and buying up the dollar. And the reason we care about that is, even though this market has been long in the tooth, or this rally has been long in the tooth, and we're overdue for a pretty large retrace, what's been powering us slowly higher has been the weakness in the dollar. Now, if there's serious intervention in the dollar in the near term, buying it up, then that'll change the deck for us now near term. And the a bounce, remember, a bounce in the dollar equates to a sell off in the market. Sell off in the dollar equates to a bounce in the market. So that's why we continue to monitor what's going on in the dollar. Quick mention on the SMH, not the prettiest of charts here, but you'll note this candle formation that we've seen. 9 out of 10 times when we see a candle formation like this on the SMH, we see a higher price in the next trading session. It's happened many, many times. We had a failure there 2 weeks ago, but for the most time, when you see it, the next day sees a pop higher, pop higher. Uh, Here we go, right here, pop higher the next day, pop higher the next day, pop higher the next day. So just one of those things. Most of the time it works, and the stars are sort of aligning for at least some sort of pop tomorrow. So if you're looking to raise your cash or get rid of some laggards in your portfolio, the pop might be the way to do it. And like I said in the alert on Friday, we're just taking a cautionary stance. We can always rebuy our stocks. Just because you sell a stock does not mean you cannot rebuy it. So sometimes in a market like this, being overly cautious is the best thing, and sometimes no trade is the best trade. And we're essentially going flat into Monday. We're going to see what happens tomorrow. If the market, if this Dubai sell off last week was just, a blip in this rally, then so be it. We buy more plays, as simple as that. A couple of stocks we are going to be monitoring. TRID would look to buy this one on a break of 2. You could do a buy the break of the 20-day exponential at $1.96, but 2 would really confirm the breakout here, especially as we'd be looking for at least a 10% move on it. And then you would put your stops at $1.90. SIMG, same thing. Would be looking to add this one on a close over 225 or an intraday break of 230. Again, 10% upside move on this one. Stops would be 220 following that trade. VG is one that was actually pretty strong on Friday. Like most stocks, they gapped down everything on the open, stole a bunch of positions, and then slowly walked everything up through the remainder of the session to scalp what they stole on the open. That's pretty much how Wall Street works on gap downs, which is why actually we'd love to see one tomorrow, but we're probably not going to. But this one's been acting pretty strong here. Breakout is the 20-day exponential at 132. What actually I'm looking at this one, it's about to get a positive MACD cross. Each time we've seen that happen, we've seen a pretty big spike in the price in VG. So we'll be watching this one very, very closely tomorrow. A better play actually on this one is EGHT 8x8. We've played this one many times. Cash rich, EPS, cash flow positive, actually held up very well over the last couple of trading sessions, which matters. It's about to get a positive MACD cross, about to get a cross up, or actually it already got that cross up on Friday on stochastics. And this is actually a stock that does very, very well from December into January, and it's one of our January popper plays every year. Stops would be $1.05, target would be $1.35. Target ad would love to get this one under $1.10 if at all possible. As for short plays, we'll see what happens near term, but stocks like Apple, if you're really looking for a short play, this is one you could look at. You've got a double top in place on Apple at 208, so that's what you would place your stops. Breakdown is the 50-day moving average. Right now that's at $1.94. A break below the 50-day moving average would be your short trigger on this stock, and first target would of course be 185 and then lower. You could look to add some put options on this one, maybe the February, March of 2010 puts on this. But if you're looking for shorts, these are the kind of stocks that are really long on the tooth. Another one to look at would be Baidu. Another, in my opinion, bloated turd of a stock. These guys tanked after their earnings report there in late October, and then went back to new highs over the last month on lower volume, as you can see. This would be another one. If you were looking for puts on this one or even a short, your stops would be, again, 443. But, this is one that moves very, very big. You're talking about a high-price stock, and options might be the way to go here. But again, this is one of those markets that's been just, bending the shorts over, but longs aren't making a whole lot of money. So a market like this, I tend to like to just sit in cash and be patient and look for the opportunities to come by, and we'll get a better picture of this market in the next couple of days. Also, we've got the Congress grilling Fed chairman this week, Bernanke, regarding giving him another term. They're probably going to be looking to smack him around, and maybe, sell the market off just to show him or teach him a lesson. So we've got a lot of tailwinds coming up. We could go in many different directions this week, and that's why sitting high cash is the way to be. This is typically a very strong tax selling. The next 2 to 3 weeks, and then this is when we look to pick up a bunch of small caps for the Santa/January effect. That's when tax loss selling stocks bounce back big in January. We'll have a list of those coming up shortly, and for the most part, we're maintaining our cash levels and just looking for buying opportunities. That's it for the video. See you guys in the chat room tomorrow. Goodbye.